Hey everyone, this is Rob Keynes with goldsilverpros.com. I have a very special guest on today. Kirian van Hest, also known as Deso on Twitter, has joined us to talk about shadow contracts and COMEX. As you guys may have seen in a recent video, I found some anomalies in the COMEX data, and I think he's finding some very interesting ones as well. So very glad to have you on the program, Kirian. Thank you for joining us.
Thank you for having me. And I would like to just start off by saying thank you to everybody who sent messages and came to follow me on Twitter. It has been such a trip. And what I expected to maybe, in the best of case, double my followers after like a day and then fight off the Twitter trolls for 3 months until I finally was proven right. But people love the story so much more. I went up 10 times in followers in a day. I went to bed with 135, and the next day I went to bed with 1,000. And by the time I woke up, it was more than 1,350. It's now past 1,500, and it just keeps going up. And it's almost universally positive. I haven't even seen this much positivity since the 90s. So yeah, thank you all so much.
Well, I think you definitely earned it, because I think the information you're sharing is very timely, and it's also helping a lot of people understand what's going on. Because I think for the longest time, there's been a disconnect in what we all have expected to see in gold and silver and what we actually saw. And I think what your data is showing is it's kind of pulling back the curtain and showing people what really goes on. So I'm just going to let you kind of take it from here and show us what you found. And I may throw a couple of questions in here or there.
Sure. So I prepared some stuff. If you want to know the more or less history of that, I think I covered it pretty well in the Palisades video. So yeah, we'll go a little bit more in depth, I think, into the origin of the shadow contracts when they first came into being and how the COMEX looked around that time, because knowing the past is, controlling the future. So you should be able to see my photos.
Can you zoom in just a tad bit so we can see the numbers?
Yeah, I want to apologize for making long screenshots, but since I basically only had the energy to do anything on Twitter, I basically made them all phone size, so you can zoom in and just scroll up and down. So what we're looking at here is the silver deliveries before the shadow contracts started arriving, before I noticed any of them. Now, at this point, I was just tracking the massive deliveries that were happening. As you can see on the April of 27th, it was just still rolling over into July at the time from May. And on the 28th, it still rolled over. I missed the 29th. But you can basically see the results of that on the 30th, where the change was higher than the deliveries. So more contracts disappeared than were delivered. And that is what you would expect to see, right? I mean, if a contract is delivered, then the bar is given and you don't need the contract anymore, so it goes away. So on the 30th, it just happened. On the 1st, it just also, the change was almost the same, but still went down more. And that it goes down more than the deliveries isn't a problem. Like how it was back in February is that normally all this open interest just rolls over until the last day. And on the last day, they just deliver whatever open interest is left. That's how it used to be. So the fact that this was happening in April, it was already a giant deal, but I am sure you covered this at the time, like many others. And as you can see on May 5th, on a Tuesday, deliveries and change was still as you would expect. What we're looking at now is Silver Scotia. This was on the May 8th. This was around the news that Scotia was getting out of the silver market, which I'm sure you will have covered. And I got the activity date wrong, so I just downloaded the stocks on the 8th, but they report the 7th on the 8th. So that doesn't line up, but that's not important. What is important here is that the deliveries were 8 and the change was -4. That's a change of 4 that is not explained.
Mm-hmm.
And I didn't catch it at the time, only when I was looking through my memory box, which is just the screenshots I've saved for posterity now. Yeah, so this change doesn't line up. Had I had focused on it at the time, I would have questioned it. Well, I would have said it was a computer glitch. And it's actually funny, not too long after this, they changed the website. Because if you'll notice how it looks on this, the website looked different at the start of the year than it does now. And that's another thing that completely blew my mind after the fact, because I didn't even think about it at the time. I actually thought like, ooh, nice, new website looks nice. You know, that'll improve my screenshots. Maybe someone will believe me. But yeah, it used to look different. So what they must have done is they must have run this as a test, and then they thought, well, if somebody notices it, we'll just say it was glitchy and we were replacing it anyway.
Mm-hmm.
Now, I don't have any evidence for this, of course, but the timing of it all is just so highly suspect. Because, let's see. This is another one I prepared. Just on the May 8th. And the other one was on... well, you can see on the May 11th and May 8th. So on the 8th, they have this change. They have the shadow contracts that are just mysteriously appearing. But on the very next day, it's gone. You see, the deliveries line up with change.
Mm-hmm. That's right.
So that's why you can see I have these screenshots. I was looking at it at the time and I just didn't think anything of it. It's just a glitch. But apparently not, and this is how they get you. And I bring this up because I was talking with you on Twitter about your August 27th video, where you were talking about Jackson Hole, and you were highlighting that 8,000 contracts rolled over, but you didn't make the connection that 8,000 October contracts rolled over, and September was up for delivery. And that's just weird.
Mm-hmm.
So maybe talk a little bit about that. What was going specifically through your mind? Because these are all mind games. I'm interested to know, actually.
Yeah, you know, I probably glossed right over that. But the funny thing is, when I saw the September contracts rolling over, I thought, man, there was so much open interest and it's all rolling over. That to me seemed a bit suspicious, because typically we don't see that much rolling over into the end of the month. And some people were telling me, well, you know, gold leads silver. So, you know, you're not going to have a big move in silver before gold. And I'm thinking that may be true typically, but I'm seeing the open interest. Why is all of that rolling over? But I wasn't even paying attention to what was going on in October. I was so focused on September, I wasn't even looking at October.
Yeah, but that's exactly how they get you. And again, the same happened to me. I saw your video of yesterday where you go deep into the contracts. I hadn't even thought of looking at shenanigans with future contracts in current day deliveries. I was completely focused on the deliveries of, you know, the day not lining up and how that pattern changes over time. So I guess we all see our own little piece of the pattern, and we just kind of blindly stare at it. Maybe I see more than others, and that's why I'm the person who just found it. But in the end, we're all just very limited in our capacity. We just have to trust each other to just do the good work, I guess. This is the screenshot I really wanted to share. Is that this is what was happening during the whole thing. And you can see the local time under the time. This was on the 27th while it was happening. And the interesting thing, what I saw that really got me was that the volume of the December contract and the volume of the September contract is pretty much equal in size. Oh, hang on, I'm just gonna close that. So this is skewed. This is really skewed. It shouldn't be. There shouldn't be 65 to 57. There should be like 65 to maybe 40, maybe 45 on a busy day. Why is it so high? Because you can see on the 26th from the day before, the same amount of contracts rolled over, about a little over 14K both days. But it rolled over to December on the 26th. And you can see the ratio is about half. So there was about half as much activity in December as in September. Now, let's see. Yeah. This is a comparison of what it looked like the month previous. On the 29th of June, the day before the massive June deliveries, which were 16,834 contracts, which is like 72 million ounces of silver, by the way. Also, now that I've highlighted that number, just look at the last day on the 28th. There was 10,000. So it's quite a difference. Just wanted to highlight that again. But on the last day, before the massive wall of deliveries, you can see that there was about 5.6 times more activity in the contract for the next month than this month. Obviously, when there's such a change such difference in open interest, the next month contracts will be much more active than the previous month. I know there's a month in between, but we're talking about the quote-unquote active contract here. There's no open interest for August, as you can see, so that's not interesting. But if you go to the last 3 days before the recent delivery started, including the Jackson Hole. So on the 26th, you can see it's about half, which is not unexpected. The volume for current contract stays really high until the last day, as you can see. Like this was expected. So that it then on the 27th goes to near parity. With so many contracts rolling over. And again, I want to point out that there were so little contracts going to December, especially when you compare it to the previous day, where it was 5.5K nearly, and then only 1,000. That is, like you said, even you noticed this. This is suspicious. Just out of context, this is already suspicious. So it set off all kinds of alarm bells for me. And then you go to the next day after the Jackson Hole slam, and you can see that the activity in the December contract was more than 11 times as high in the September contract. Now, at that point, the rolling over and such doesn't even matter anymore. But again, it is a pattern of events, the order of events and the pattern of events that matter, not each event separately. So the fact that after the Jackson Hole speech and the volatility we saw that day, the next day, the ratio between contracts traded is half what it was the previous month. That just confirms what it means to have so many contracts disappear, even though they were set for delivery 2 days later. And I want to also just stress to people why it is so important that the size of contracts that roll over in one day, it goes for what you might call decision capital. Let's assume for a moment that, say, 10 million ounces were delivered. And every single person that got delivery just delivered 1 ounce. So you have 10 million people that got delivery 1 ounce. Well, that is also 10 million people that need to say, I want to stand for delivery. And that's a lot of people you need to convince to roll over the contracts and not stand for delivery. Now, of course, we're working with very large banks and very large investors here, so it won't be 10 million people, it will be very few. Regardless, the same principle still applies. the more weight somebody has, the more contracts somebody has that he wants to roll over, you still need to convince more and bigger players to do so. So that out of nowhere, 14,000 contracts rolled over, and I'm just I can't help it. I mean, I know you're a numbers guy, so I'm just gonna let loose today, if you don't mind.
I don't mind at all.
So this is 5,000 ounces per contract. That's what's just vanished, just gone. It just puff, and it happened 2 days in a row. Only the previous day, it rolled over. You can't see it on the screenshot, but for March 2021, there were about 3,500 contracts that were added. So we lost. Open interest went down by about 5,000. 5,500 went to December. 3,500 went to March, which, by the way, also looks like a normal pattern because I'm saying it very callously. But let's just take a moment right there and think about that. September rolled over to March 2021.
Mm-hmm.
Let's see. September is the 9th month. We're in early September, so let's count September. September is 1. Then you get October. Then you get November. Then you get December. Then you get January. Then you get February. Then you get March. Now, my fingers say that's 7 months away, and it's already rolling over to that date. That is somewhat ridiculous, do you not think?
Yeah, because why would the participants take that much time risk? That's time risk there in taking a position that far out.
Yeah. Yeah, there's only one reason why the contracts would roll out to that far, is they can't get it any earlier.
Mm-hmm. Yeah, in a normal market, a lot of people wouldn't do that. But they're doing it now because out of necessity, because like you said, they don't have it available. Yep. So, but a normal person's not going to go out 7 months and say, okay, I'm going to place place a contract and I'm going to stand for delivery 7 months out. Why would you do that? A lot of things can change in the meantime. The price can change. Maybe you can get it somewhere else.
I don't know what the listeners think of the current situation, but I am not thinking that I can buy anything in 7 months from now.
I agree.
We haven't even seen the mortgage crisis begin.
That's astounding, and maybe the difference from 2008, because while we're going through a mortgage crisis, 2008, you could still secure supply.
Yep.
Now I think the supply has already been taken.
Yep.
And what are people going to go to when the big crash happens this time?
That's what the data says, and well, again, I have been saying this on Twitter, and I really, really mean it. I hope I'm wrong. I really hope I'm wrong. Because if I'm right, so many people will suffer. Because no matter how many interviews I do right now, there is no possible way that I can reach enough people to get them ready for the end. And even if I could, because the silver is already gone, I can't save everybody anymore.
That's right.
That's just not that option has stopped being. Oh, now that I think about it, let's just segue into this. I want to talk a little bit about inflation because that's a hot topic right now. And it's not specifically inflation I want to talk about, even though I've got plenty about that to say as well. It is that what is about to happen is not inflation. I call it the great revaluing, because what has simply happened is we think there's a lot of silver. The general, zeitgeist, the spirit of the times. People in general think there's plenty of silver to go around. They don't know anything about any mining deficits for 10 years. It's not on their radar. It wasn't even on my radar, So all of those people think there's enough silver. And one day there's going to be a message that the COMEX has failed delivery. And they're going to, why do I care? Well, there's no more silver. Well, what do you mean there's no more silver? Well, there's no more silver. But you can just buy it in the shop. You don't get it. There's no more silver.
That's right.
Well, I'm just going to go to the web shop and why is there no more silver? Well, that's but they're betraying the... Oh, that's too late. that's how it's gonna happen for a lot of people.
That's
and
right.
we just see it coming, because it's not magic what I'm doing here. It's just logic, reasoning, and prediction. You can imagine this with any good where you think there's a lot and there suddenly is not. And it's still, that's just called supply and demand. That's all it's going to happen. So I actually prepared a little example in my head just to, because people, a lot of the comments that I've received is that I seem to explain things well for the ordinary person. So I just want to try and keep that up. Imagine, if you will, that you have 4 piles of assets. You have 1 pile of dollars, 1 pile of euros, 1 pile of gold, 1 pile of copper. You have 10 of each. So 10 euros, $10, let's say 10 ounces, because measured in ounces, and 10 kilos of copper, because copper is just fairly abundant, you would agree. So let's just say somebody kept half of the 10 ounces of gold in this economy on the edge of a cliff in front of the sea. Not very smart. So it falls off. It gets lost at sea. Many ships with silver and such used to sink. So now there are 10 euros, $10, 5 ounces, 10 kilos of copper. Priced in everything else, ounces will go up, because you used to be able to buy 1 ounce for $1 or €1 because everything was at parity. Half of the ounces have gone, so you need double the money to buy the same amount. Because if somebody was to buy 1 ounce for $1, by the time you got 0 ounces, there will still be $5 left. And it doesn't make any sense. So through a lot of complex things that you don't need to worry about, it's going to happen that the price of gold in ounces is just going to double. You need to pay twice as many dollars, or twice as many euros, or twice as much copper for the ounces. That is the great revaluing that's about to happen, because we've been saying for a long time that there was plenty of silver, and there just isn't. So it's the same as there was just a bunch of silver on a ship that sunk at sea. It's gone. Only in this case, it was never there to begin with. Now, this is different from inflation, because inflation deals with the changing of value of currencies simply by supply and demand of the currencies. So in the same situation, let's just reset it. You have 10 of everything again. Only now you print $20. And then 5 ounces fall off a cliff. Well, in this case, the price in euro doubles, the price in copper still doubles, but because there's now twice as many dollars as before, the price in dollars quadruples. So you pay 2 euros for an ounce, but you pay $4 for an ounce, because the dollar is still just a separate asset. You now have 4 times as much as you have gold, because you lost half of the gold and you doubled the supply of money. And that is inflation on top of the revaluation, because the price of copper, which did not change, I have not talked about it. So you still have 10 kilos. Since you have double the dollars, the price of copper also goes up two times. So for 1 kilo of copper, you don't pay $1, you pay 2, because you have 10 kilos and $20. That is inflation. So when inflation will hit the dollar will lose value versus the euro and copper. But the revaluing will mean that gold goes up against everything else. Mm-hmm. And I wanted to mention this, and I designed this specifically because of something I saw on your website. You called that gold was going to go up in all currencies, and I didn't even spot that until this year.
Yeah, because if you look at the dollar index, people focus on the dollar index, the strength of the dollar, but it's just relative to all the fiat currencies. But gold, but when you talk about the fiat currencies, you have to measure them in gold, not the other way around. So we price gold in dollars, but really it should be pricing the currency in gold.
Yes.
Because the currencies you can inflate, the gold's very hard to inflate. You have to mine it.
Well, I feel we should it's all just really an asset. We talk about gold, but when you talk about uranium, it is also, uranium is more rare than gold, I think. Well, it's harder to extract in any case.
Mm-hmm.
And the uranium price is not where it should be. It's been below cost for so long. So that will start rising too when the dollar starts inflating, because anything you can't print doesn't lose value, or anything you can't print holds its value versus something you can print, because it takes no effort to print. It takes no value to print, no labor, no scarcity, no, because you can do it all digitally. Jay Powell literally said on TV, we printed digitally. I almost had a heart attack. Damn. I mean, the man on TV just says that they conjure up currency out of nothing and the economy doesn't collapse. That kind of surprises me.
You know, there was an interview with him, and I forget who it was. I want to say it's I think it was 60 Minutes. And actually, I think it was Bernanke. They were interviewing Bernanke years ago, and they said, how do you know, is it ever going to be an issue if we default on our debt? I said, no, because we can just print money. And they asked him, what do you mean print money? It's like, we literally just type in numbers on a computer and we just increase the balances.
Yeah.
And that's how they do it. And they plan on addressing the debt issue with printing currency. And that's going to hyperinflate the currency. And then that's when you're going to see the gold and silver. People will not get rid of it for any amount of fiat money because they realize the fiat money doesn't have value. Yeah, you know, a lot of the questions I get as I do this series of videos is, what do I do? People are in ETFs, they're in the GOD, they're in...
Oh, God.
Yeah, and I tell them, you know, get out of all the... I'm not a financial advisor, but I said, you know, what I would do is I'd get out of all the paper derivatives of gold and just go find physical. But I think people are starting to listen, which is a good thing. But you know, the people that are emailing me now are going to be ahead of the game. But when you have the public starting to realize this and they're dumping the GLD and they're dumping stocks or whatever they're dumping, you know, I feel bad because I don't think they're going to be able to get it. They're not going to be able to find it.
Yeah. Michael Burry actually spoke out on the ETF bubble last September, because it's basically you have a very large room filled with a lot of people and a very small exit, and they're not going to fit through the door all at the same time, which is also the same thing I've been saying. Even the virus wasn't that much of a problem. The problem is everybody acting at exactly the same time, doing exactly the same thing, and society is just not built for it. I've had more time to think about it, and it's very simple. If any of the ETFs that are based on physical, whether it's GLD or SLV or whatever, they can prove that they have the physical that they already have in number of shares that they say they have, there's not a problem. Because it's an ETF based on physical, and if they can't find more physical, then just don't issue more shares, right? But then the ETF goes the same way as physical silver. It'll just become a supply-limited commodity. It'll trade like a supply-limited commodity because it's basically silver at that point. It's basically a static mountain of silver that people either decide to hold or sell if they don't print more shares, and then they don't have to source more physical. So the people who are still holding that will just get as rich as people who hold silver. But I would not bet on that. That is a very dangerous bet to make, simply because the research Bullion Star TV has done on this and shown that the GLD is sourcing gold bars at the Bank of England. And if you've seen the message about Venezuela trying to get the gold from the Bank of England, and England basically said no, well,
because they don't have it.
It doesn't matter if they have it or not, if it's still in the vault or not. What's Venezuela going to do? Invade England?
Yeah.
I mean, that's just the way of the world. It's not fair, but guess what? The world isn't fair. It's extremely unfair. And if you just stop to think for a moment how this is all going to end, because I know there's a lot of people just realizing now, this isn't going to end well, is it? No, it is not. This is going to end very badly. And there's nothing we can do to stop it either. This isn't like I said, the supervillain has won. This isn't a question anymore of trying to stop something bad from happening and changing directions and going on a merry way. This is about trying to save as many people as we can before the inevitable end, so that whoever still has the brains to think for themselves can be used to rebuild this mess once it's all burned down. That is the situation we are in. And I don't think people still fully realize or appreciate that yet. I also wanted to see, let's see. Oh, this. I showed this to people in, in March. I actually made this on the 16th of March. This is what's happening. That this is what's already happened back in March. Because you can basically see what happened in 2008. And that peak that's after this, that's the future. Now, people have asked me for a price target, and that's the fun I wanted to have. With the caveat that setting a price target in this market is just absolutely foolish to do, because none of us know exactly where everything's going to end up, right? I do have a chart that I just made, and it's this one. Basically, I copied what happened in the 70s, and I just enlarged it. I didn't. I scaled it to with the same size. So the yellow box is the yellow shape, and then I just extended the lines upwards, just counting the lines, and this is what I think will happen, or what could happen. What could happen? Because we're having fun. We're having fun. This isn't the solid prediction. This is what could happen to the price of gold in the next bull market. And if you will look closely at this chart, you will see this is inflation adjusted.
That's right.
This isn't even, inflation comes on top of this. This is an inflation adjusted chart. This is just supply and demand. It's going to get much worse.
And one thing I'd like to point out on your chart, if you look between 1980 and 2000, what is that about? 2011, there's a cup formation. And then since 2011, we've had the handle. That's a very bullish pattern. What is that, 30-year pattern?
Yep.
Those patterns almost always mean a big rise in price.
And I made that on June. So.
Yeah.
This is what I think. If any, look, many people have called a price, but I've never seen anybody offer up a chart of how they came to that price. This is the best they got. We won't know, but this is the best I got.
Yeah, it's an awesome chart. So if you back out inflation or the inflation adjustment, it's going to be what, 10,000, 15,000 in nominal terms? We can't call that. That's not, I want to call it. I want to give you a number, but it's impossible to say because, like I said, once the revaluation happens and we realize that not 5 ounces, but 9.99% of ounces are just gone, it's 0.01 ounces that's left, this is going to happen. And once this is done, everybody's going to say, well, okay, we have a lot of dollars now. Should they be worth this much? And that is when the inflation starts. Right.
And it's not going to stop. Jay Powell wants inflation. He's going to get it.
Yeah, that's right. So I think that's when I know you said you're going on Lynette's channel here September 16th. Is that right?
Yep. And I don't know if I'm going to do any interviews in between, but if I do, you can, I'll announce it on Twitter. So at Deso Games, at Deso Games, it wouldn't be hard to find me at this point.
Yeah, no, we'll put all your information down in the comments box for the video as well. The reason I mentioned Lynette is because that's your next scheduled interview, but she's a big reset person. So I'm sure you will get even deeper into the reset stuff with her. She's been talking about that for a couple of years now.
I am dying to talk about the repo crisis with her. I have a pattern that I found all the way back to 2009, and she is gonna get a kick out of that.
Yeah.
But that'll be for the 16th.
That's right. Let's leave that as a tease for your next interview.
Oh, by the way, that's when I'm recording. So I don't know when it comes out, but that's when I'm recording it. So
awesome. We'll look forward to it. Again, thank you, Kirian, so much. I appreciate you coming on the show, man.
I appreciate you for having me. You're